Hey guys, thanks for tuning in. Before we get started in today's video, don't forget to join our free Facebook community, get real answers to real credit questions, learn from some of the experts in our industry, as well as from other people that are in similar situations that are taking advantage of the free content, improving their credit and making their credit situation better. Hope to see you guys on the inside. Hey guys, I'm Joe Chavarria. Today I want to talk about what happens behind the scenes when you go to a car dealership and you do the financing. Let's take a behind the scenes look as to what happens behind the loan.
Disclaimer: I'm not a lawyer, and this should not be considered legal advice. One should seek appropriate counsel for one's own scenario. Please note, this video is directed towards viewers in the United States. If you are concluding business outside the United States, we highly encourage one to find and understand obligations regarding one's disclosure.
So to the average consumer, what you will probably do is do some research on the type of vehicle that you like. You'll probably narrow it down to a couple different dealerships, then probably decide on one, and then go in person to look at the vehicle up front and personal, test drive it, ask a couple more questions, and then move forward in the process. But what happens behind the scenes? Let's take a look at that. So the very first thing that's going to happen is you're going to submit a credit application, and your personal credit is going to be shotgunned and shopped around to a bunch of different lenders, auto lenders, banks that may or may not decide to do business in this deal. Now, a quick side note to that, I do have clients sometimes that get very worried when they see multiple hard inquiries on the report from a car dealership or from a bunch of different lenders. I do want to throw out there a little something to help calm you guys down, calm my clients down, or just in general calm people down with this when this happens. There's a little formula or a little logic called deduplication logic that's added into the algorithm for FICO and Vantage scoring. FICO will allow multiple inquiries from the same industry as long as it's auto, mortgage, or student loan. They'll allow all the inquiries to be scored and treated as one as long as they're within 45 days of each other. And Vantage scoring, I believe it's 14 days on Vantage scoring. But so, typically if you go to a car dealership and they run your credit multiple times, all those inquiries are going to be obviously back to back or within the same day, and those will all be scored and treated as one. So don't worry about all those alerts, all those inquiries. Your credit is not destroyed, it's not ruined. There is definitely a lot of life after the fact. All right, so back to the contract, back to the deal. So when you're getting ready to sign paperwork at the dealership, you are signing what's called a retail installment contract. So there's a contract between you and the dealership, and there is a bank behind the scenes. You probably know who it is by this point because you'll know what the rate is and the monthly payment and all that. But there's a bank that is basically behind the scenes and waiting for this transaction to finish. So along with the retail installment contract you'll be signing with the dealership, there's also a security agreement. This security agreement is what makes your vehicle collateral, and this is what makes the entire transaction very valuable to the bank over here on the side that's kind of lurking and waiting for this deal to get done. Then once all of this is signed and finalized and you agree to everything, this contract is then assigned to that bank that's been waiting. It's assigned to them. They are essentially buying that contract from that car dealership. They're essentially stepping into the shoes of the dealer. They become the seller. And what happens here is that this gets classified many times as an auto loan, and the average consumer will believe it's an auto loan. But this transaction really is not an auto loan. It's merely just a contract that's assigned to a bank. It's really just a retail installment contract, just a number of payments you have to pay back this vehicle. But it's not really an auto loan. So that's basically what happens behind the scene with your contract. And you may say, so what's the big deal? So what? Well, I'm a person that likes the truth, obviously. I'm very particular when it comes to certain details. And if you ever find yourself in a pickle with this account, maybe it ended up becoming a repo, or you fell behind on the payments and you want to dispute it, that's a good argument to make the fact that this transaction really is not an auto loan, especially if it's classified as an auto loan on your credit report as an account type. it's really not an auto loan. That's not really the truth of the matter with this account. It's actually an installment contract and not an auto loan. So I just wanted to share that with you guys because I do believe, you know, facts matter. I think that's a very important part to know what's going on behind the scenes with this transaction, so the average consumer can be in the know. And when you're in the know, you're more powerful when it comes to having to fight with any of the banks and lenders to get any negative and accurate information off your credit report. So that's my time today, guys. I really hope you enjoyed today's video. If you did, give me a big thumbs up. Don't forget to subscribe. Leave any comments you have below, any questions you have regarding any of this information. Again, I'm Joe Chavarria. I'll see you guys next time. Take care.